Good day, all. Ira Epstein of Linn Associates with your agriculture update, and this is for Wednesday. And we are now at the 5th of June, 2019, pushing 4:40 in the afternoon. So as we take a look, a big down day in the grains, and that's, as I told you, in weather markets, the first time the weather is going to get whatever favorable word means, the markets pull back, and that's what we've got. In fact, a lot of these markets act like this particular leg, technically speaking, might have run its course. That doesn't mean you don't get more wet weather. It doesn't mean rain doesn't come into the forecast again and the market doesn't take off. But right now, drier conditions in key areas seem to be the key, and that market pulled back. Stock market still betting that the Fed's got the markets back. I don't know if that's right, wrong, or indifferent. We're hearing talk that today was the first meeting on Mexico and the U.S., and I understand Mike Pompeo was in the meeting. Vice President Pence is there. I don't know how the meeting went. It may still be going on for all that I know, but the market is counting, and especially on both parties, Democrats and Republicans, they're really coming out against putting tariffs on Mexico. On the other hand, I don't think anybody's disagreeing. Mexico should defend its border and not let 2,000 miles of a caravan come all the way up to the U.S. border. They'll find a solution is what we're all hoping for. Don't know. In the energy market, because this always has to do with ethanol and so on, that's why I so often include it here, you had a monster build today out of the EIA. So yesterday we saw just over 12 million, 12.5 million build in the API number, over 15 million today in the EIA number. So there's an awful lot of energy around is the point. If you look at soybeans and you look at where the market's stalling on the weekly chart, it's against the 18-week moving average of closes. I still think this market's in a down thrust. It's been a nice rally, no question, from 7.97 all the way up nearly $1 higher, but the market's starting to run into some problems. The high for this week so far, 894.5. If the market's going to pull back here, remember, I've been leaving on this chart intentionally the two gaps that are in the chart, and obviously I would look first at this one, see if the market's going to try to fill it. Certainly going home, the market looks that way, and I say that because you've now got a higher high, lower low pattern. The market has finally stepped out of what we'll call an uptrend. The resistance was not the 100-day. It just couldn't get up to that $9 level. On the way back down, supports at 844.5. I know that sounds far away. It's 25 cents. It's not a big deal. But again, the key is these gaps that are left in the chart, and we'll see if the market makes a run there. When I look at Bollinger Bands, which are these black lines, remember the importance of them. It is an algorithm designed to keep the market trading within it 95% of the time. And as you can see, the market got over it, no question about that, but only 5% of the time will it stay over it. That's how the algorithm is built. And it's offering you a resistance point. As you got up into this area, the first challenge of it, the upper Bollinger Band and the 100-day average, probably a lot of traders took notice of that. In terms of momentum, momentum is turning down, as you can see. You had here prior to this, both numbers over 80, both over 80 the day before, but not the day before that. And I'm pretty sure that I would have said yesterday, I think today's going to be an important day in the market. Is it going to embed or is it going to not do that? Well, it's decided to not do that. So you have an overbought market. Still plenty of resistance, 897 and 900.25, and the potential is if the market wants to drop, maybe it goes back to what I call that line in the sand to see what it's made out of. In the meal market, momentum's turning down. Momentum often leads price. You've got a pattern now. In fact, I could have drawn this a little bit different looking at it. I think I could have had arrows pointing down right here. If we come back to this high right there, it's, let's see, the high of that would have been 328.10. Market pulls back, comes back on the rally, 327.10, and then breaks down. I drew this wrong. Should be lower highs, lower lows, so you're out of the uptrend that you had. The first support, unlike beans, would be the 100-day average, which is 310.70. Then under that, the 18-day average. Now the market has stepped out of this phase in both beans where you had the surge, you no longer have the higher highs, higher lows. Same in the meal market. You've gone into a stall at a minimum. Soybean oil's entered the bear camp. It's got lower highs, lower lows, and today it did manage to close under the 18-day average, putting into play the possibility that if prices wanted to go down further instead of hanging at the 18-day average, maybe the lower Bollinger Band right now at 26.61 becomes the near-term support. The corn, I did the numbers right, I just missed the meal. Lower highs, now lower lows, putting into play this area of support potential, certainly the 18-day average first, if the market decides to give a break. Is it a big break? 17 cents from here? No. Remember, this is a market that just came from approximately the 340s up $1 a bushel. So giving that up and pulling back a little bit could be where the market says, okay, we've built in a bad case scenario. Now let's see what kind of acreage we get planted. Where's the drying happening? What are we going to be able to get in the ground? In the wheat market, momentum is leading price. You lost the embedded reading today. Therefore, I expect the bears to come out in force here and try to drive this market back to the 18 and 100-day average of closes. Doesn't mean I'll be right, but that's what I would be expecting on the chart. The interesting part will be, does it get under this last break low in the 482 area? In the sugar market, it was running. With the exception of today, the market had gotten up 2 days in a row to the upper Bollinger Band in an overbought condition. Would the market pull back was the question, or go up to the 100-day average? It's making an attempt at a pullback. Support still at this market at 1185, but you are very overbought. Now in the coffee market, without today's action, let's go to yesterday. Here's the market fighting a battle at the upper Bollinger Band, and it's been running on it. We had sideways action right here, and this is always good to learn from. Sideways action resolves itself typically in either breaking out to the upside or downside, and yes, you can have false breakouts along the way. This market finally lifted itself, and the question was this one going to be real? Because you were overbought, no question about that. The market kept lifting itself, got to the 100-day average. Unless you're just going to run like a son of a gun at that point, this is a pretty important chart number, and chartists will generally take note of it. You can see the market still spiked ahead of it, and all of a sudden, you're coming back to that number, and that's the point. When you get over an important number on the way down, often that number becomes, if it was resistance on the way up, the first support on the way down. The important thing is this market did get under 99.05, so you've got a higher high, lower low pattern, and if you're going to slip here, 95.31 could be in play. There's something else important. You lost the embedded reading, which puts the odds that this market wants to break further in play. In the cocoa market, you're corrected now, past tense, an overbought condition that showed up when you lost the embedded reading. Here's the embedded reading. When you lose it, price and 18-day average often make a run. Now, I say the 18. It depends where the 100-day is as well. But in this relationship, it's the closest of. It went down. Now the next number could be the 100. Notice how the market held it, and today came right back to the 18. So the market now has no trend. It's just sort of whipping back and forth, trying to figure out what next. In the cotton market, what I see is the narrowing of the Bollinger Bands, the sideways action the market is trying to accomplish. It's void of a trend because you've got a lower low and a higher high. The bias is up because you're over the 18-day average, but momentum is overbought as can be. In the cattle market, we had a couple of days here where we got under the lower Bollinger Band and we're getting a bounce. Now, if grains break, that obviously helps the cost of feed. So the market's getting a little bounce here, but are we going to get the demand for the beef? That's the question. Resistance back at the 18-day average, but you're in an oversold condition, so I don't know that the bears will show up the way that they would if you weren't in an oversold condition. In the feeder cattle, you're correcting the oversold condition. See how the market's picking itself up? Once the blue line, which is the D line, gets over 30, it's no longer in oversold territory according to the way that I teach this. You've got lower highs, lower lows. I'm looking for resistance in the 140, 150 area. And in the hog market, should the market be able to rally more, this whole zone between the 18-day average in red and the 100-day average is where I'd look for the resistance in the market. What the market has done is it's ridden the lower Bollinger Band down. It's kept downside bias, frankly, since back here, mid-May. And now the market's trying to figure out what to do next. Where's the demand going to come from becomes the question that a lot of traders are going to ask themselves. In the mornings, what I do is I wake up reading like a madman at 5 in the morning, and I try to start recording a video for my subscribers at 6:15 a.m. That's 6:15 a.m. And the charts will look like this. They're a different color because they're easy to see if you're watching it on your iPhones, your Androids, if you got a tablet, whatever. I do not appear in this video. I talk over it. And what this does in the video is I'm going to bring up the points that I see that are going to affect the morning trade for you. I'm going to review 40 futures markets typically, and I try to do 5 ETFs. The idea here is you're having a cup of coffee, you're taking a look, and you probably maybe have your own idea of markets you're looking at. I'm going to cover the markets in this exact sequence. The beauty is if you don't want to go through all of these, as you move your cursor over the bottom, it'll tell you what section I'm in, and there'll be a lexicon on this side that shows you the same thing. The idea, coming up with the swing trades, if I see something that I like for a good position, you're going to hear that as well. The difference in this video than the one that you're watching me in right now is I am allowed, because it's a subscriber video, to say, buy here, sell there, put a stop here, get into the market at the market, do this whatever I think. I'm going to talk chart action, what I think the pros are doing, what I've read about through that early morning to get you set for the first reports. And the reason I record at 6:15 a.m., I want you to have an idea going into the morning government reports or whatever's going to come out. They typically start about 7:30 a.m., what to expect. If I see something important during the day, don't be surprised if I re-record a video and put it out. Today I know there was some glitch that I had from my home computer. I recorded, got to the office, did another one for all my subscribers. So how do you get this and give yourself a try? Well, it's pretty simple. It runs 26 and a half cents a day, $7.95 for the first 30 days, no contract, no commitment on your part. If you like it, you then make up your mind if you want to continue. It's $15 for the next 30 days, or you can buy a year's subscription for $156. Your choice. So at 26 and a half cents a day, if you want to give it a try, simply go to our website. Under the word education or research, Ira's morning subscriber video. It's all explained there. You can sign up right there and then, and away you go. By the way, you also get, as part of this subscription, my iPhone and Android app, so that you can watch right in those and get quotes and charts and everything, these videos as they come out. A push notification will come to you, not a text. And what the push notification does is, number one, it's free. You just click it and the video will start playing. Pretty cool. I'm Ira Epstein. You have a good day.